Hey guys, Matt here, coming to you with another video about stocks and what's going on in the stock market. Right now, if you haven't heard about Roblox having their IPO, but it's one of the next supposed big IPOs to come out. A lot of people don't really understand what Roblox is other than just being a game for children. And so I want to break down why this is getting so much buzz. So there's a post here on WallStreet Bets where Gushing Granny One was able to do some pretty good due diligence on Roblox and why they think it's a certain buy when it IPOs. Granted, there's an asterisk on this. Nobody knows when it's going to IPO yet. They've only filed and they're expected to IPO before the end of 2020. So within the next month, roughly, we should be seeing an announcement for Roblox to IPO. Now, what is Roblox? All right, so like I said, it's a game for kids. However, why would we want to invest in a game for kids? Well, for one, this is how every other investor out there is thinking about it. Anybody over the age of 30 or 40 that is a traditional investor, they won't be thinking of this as anything other than just a game for kids, where they make money by using their parents' credit card and buying in-game currency and just continuing to play the game. Why is this any different than any other game out there like Call of Duty or any other game? Well, there's a couple reasons. So Roblox isn't just a game. It's a game that has three aspects to it. One, the game side of it itself. Two, the social aspect. And three, the fact that it's user generated, just like YouTube. And when I say just like YouTube, the reason I make that comparison, and you'll see this out there online, but just to make the quick comparison here, it's because Roblox pays the developers in-game, they're in-game players that develop these worlds for all the players to play games. They pay them and they have the opportunity to make money on this platform just like anybody on YouTube who's trying to get monetized and build subscribers and gain likes. Roblox is doing the same exact thing. They have all their players as being able to make their own worlds, their own games, and if they attract enough premium users and attract enough players that are spending Robux, which is the in-game currency, within their worlds, they actually make a share of that money. And it's been as much as 70% depending on how well you're doing in the world that you created. So over on this article over here from VentureBeat, it says Roblox expects to pay $250 million to its mostly young adult developers this year. This is up from $110 million from 2019, which shows that they are increasing in revenue, exactly at 68% from last year. That's a lot of growth. They've been growing a lot due to the pandemic. However, they were growing prior to the pandemic regardless, which shows that they are running a very, very good company, especially because they were able to keep costs down during all this growth. And so it shows that even though they're growing at this very fast rate, they're able to keep their costs down and make sure that their liabilities aren't exceeding how much they're bringing in. So that looks really good for a company that's getting ready to IPO, because usually these companies that come to IPO a lot of the time, they don't have any kind of profit. So let's go a little bit further into this. So, all right, we get it. It's a game. It has the social aspect where you can go meet up with your friends, play in these worlds that you create, get paid for it. And not only that, but it's an addicting game at that, because the daily active user growth rate is up 97% year over year. So they are consistently getting more and more players, which means more and more revenue. And as this feedback loop starts where they're paying their players and players want to stay and make money and have fun in all these endless worlds that are constantly being created, it's just an endless feedback loop that is just prime for explosive growth. So then what about the financials? Well, quick snapshot, the financials of the company, their balance sheet looks solid. They've got, let's see on my notes here, their current assets are at 1.2 mil. Their total assets are at 1.5 mil. And this is currently greater than their 900,000 current liabilities and their 1.4 million total liabilities. So they look like a very solid company. Their balance sheet looks fine. So hey guys, let me know, what do you think? Is this something that you're gonna invest in come IPO time? Is this something that you think you're gonna wait to see how it develops? Or is this something that you don't want to invest in at all? Make sure to leave a comment below. Let me know. I respond to everybody who comments, and I'd love to have a conversation with you guys. So until the next one, see ya.